Hi, hello everyone. Welcome back to my channel. In this video, we'll be discussing on the meaning and definition of branch, the systems of accounting maintained by the branch. We will be discussing exclusively the debtors system here. Kindly watch the video till the end, like it, share and subscribe the channel. If you have any comments about the video, please put your comments in the comment box. Let's begin with the presentation. Because of the connectivity of the technology, the entire globe has become a village today. It is possible because of the globalization. The products of various countries are available in the foreign markets. To give an example, today you find Aero brand in India, you find Mercedes-Benz in India. Similarly, Indian products will also have a demand in the foreign markets. So there is need for a decentralization of the power for promotion of the sales. One must study the prevailing conditions in a foreign market in order to promote their sales. Why the business enters to the foreign market? Because when the domestic markets get saturated, in order to promote the sales here, such businesses have to make an analysis of the business environment in that particular country. Every aim of the business is to achieve the market share, and such market share is increased by the amount of the sales. So it is the need of the hour for a business to enhance its market share to open new branches at different places. And such subdivision of the business is nothing but which is known as a branch here. So a branch is nothing but a shop which is opened in different parts of the same city or in the same country or in other countries. And all these branches are controlled by the head office for everything. There are certain branches which cannot take any independent decisions. So everything it will be decided by the head office. How much is to be purchased, how much is to be sold, who has to be employed, how much has to be paid as a salary. So the head office will have control over the branches. Then let's understand what exactly the meant by branch. As it is already told that a branch is nothing but a subdivision of the business. Say for example, Reliance More, if you take, you find branch in Belgium itself more than 2 or 3 branches. You take for example Bata, you find number of branches within the same city or within the same place, I mean to say within the same country. In the states you will find variety of the branches, and each such a subdivision is nothing but what we call it as branch here. So a branch nothing but opens shops in the different places of the same city or in the same country or in other countries also. Today you find a KFC in India, which is widely spread throughout the country. So let's understand certain definitions given by some authorities. William Pickles, he says a branch is a section of the business segregated physically from the main section. In other words, to say the main business is which is departed from the other sections. The one more definition as given by L.C. Cropper, branch is nothing but a department conducted at a distant place. So, in totally we can say that the branch is nothing but the subdivision of the business, and it is necessary for such branch, in order to ascertain its performance, the branch accounts are to be prepared. So now let us look into the types of the branches. Basically, the branches will be classified into two categories: inland branch and foreign branch. And this inland branch is further sub-classified into dependent, independent, agency branch. There will be discussion on these types of branches in the subsequent slides. But basically, the classification of the branches depends upon the area of the operation, the powers enjoyed by the branches, and the accounting procedure followed by them. Here, in case of the area of operation, it depends upon the geographical area. So where the branches exactly they are situated here. And in case of the powers enjoyed here, some branches may be given autonomy to take the decisions, and while other branches may not be given any autonomy by the head office. Whenever there is a word branch, it is followed by it will be uttered by another word called as head office. And accounting procedure is to be followed by them, because ultimately it reflects into the performance of the head office, ultimately the business here. Now let us have a detailed discussion on the various types of branches. Inland branch. As the name itself indicates, these are the branches which are situated within the same country where the head office is situated. Assume that the head office is situated in Mumbai. It may have a branch in Kolkata, or it may have a branch in Thiruvananthapuram, or it may have a branch in Bangalore, or it may have a branch in New Delhi. So the head office is located, the location of head office and the branches are within the same country. Such branch, what we call it as an inland branch. Then comes foreign branch. As the name itself indicates, these are the branches which are situated outside the home country. You take, for example, KFC, Kentucky Fried Chicken, is from US, but it may have franchises in India. Similarly, the McDonald's, similarly, say for example, Adidas, or it may say for example, the example of Mercedes-Benz. So all they are foreign brands, but which are available in India. You take for example Accenture, an US based corporate which has branches in Karnataka at Bangalore. So the foreign branches are those branches which are established in overseas countries. Then comes the dependent branch. As the name itself indicates, such branches are dependent on the head office for its requirement. Say for example, if anything is to be purchased, purchase of a fixed asset, that is to be decided by the head office. Say for example, if an asset is to be sold out, again the decision is to be taken by the head office only. So they are not at all permitted to take own decisions. They cannot employ the people on their own. Again, it has to seek the permission from the head office, and all the accounts of such branches are maintained by the head office only. So every day the cash will be remitted, Whenever the branch requires expenditure, so it is made by the head office only. Such cash may be remitted to the branch by the head office either on a daily basis or on fortnightly, weekly, or maybe monthly. And whatever the collections are made by the branches, it will be sent to the head office at the regular intervals. Say it may be like a daily, or it may be like a weekly, fortnightly, monthly, so or bi-monthly. So like this it will be sent. So for everything, the branch is dependent on the head office. It cannot surpass the words of the head office. So that's why at the beginning only it is told that the branches are controlled by the head office. Then independent branch. Here in case of the independent branches are those branches which enjoy some sort of autonomy. They enjoy the freedom to take decisions. They are independent in their operations, and even they have to submit their accounts along with the trial events to the head office. And all the accounts of all such various branches will be consolidated by the head office, and it is going to ascertain the profit or loss. But at the end of the accounting year, even they are accountable, even though they are independent in their operations, but they are accountable to the head office for the consequences here. Then comes agency branch. These are the branches which are act as a mere agent of the head office. Such branches that do not purchase and sell the goods but render agency services. In other words, to say, they are authorized to book the order and collect the credit on behalf of the head office, and the same must be sent. You may be knowing today the VRL franchises have come. Majority of the say travel agents, they work as agency branch. Say the VRL people who have taken the VRL franchisee, they book the ticket, they collect the money from the customers, and the same will be remitted to head office immediately. So they are just adhering to the policy of the organizations, and for such work they are going to get a certain sort of commission. Then need for branch accounts. Of course, basically the head office is interested to ascertain the correct trading result, whether a particular branch is functioning properly or not, which can become to known only by preparation of the final accounts, which consist of preparing the trading and P&L account and the balance sheet. Every head office is interested to know the progress of each branch. For example, a head office may be having, a company may have 10 branches. It is much interested in the performance of these 10 branches. If a particular branch is not properly working, and in such case it leads to managerial decision whether to close or to continue. And the preparation of the branch account assists the head office to improve the performance of the branch. Say for example, if a particular branch is overspending, then it will think of controlling of the expenses. If a particular branch is performing well, then in such case it will provide some incentives to the employees who are working in that particular branch. Let's look into the methods of accounting. Basically, there are two methods of accounting, that is debtor system and stock and debtor system. These methods of accounting are applicable from the point of view of dependent branches. The discussion is restricted to only the dependent branches. So let's understand what is this debtors system. Of course, basically the debtors system is a very simple one. It is more suitable for the smaller size branches. Here the relationship between the branch and the head office is that of debtor and creditor. So every branch is treated as a debtor of the head office, and accordingly the transactions will take place. And the preparation of such a branch account is nothing but it is in just preparing a nominal account. So in case of the preparation of the nominal account here, even the profit and loss account, so we are going to debit all the expenses and the losses, and all the incomes and the gains are credited. And ultimately, if there is any result in the form of a profit or loss, which will be transferred to the general P&L account, and which will be helping at the time of preparation of the consolidated balance sheet. Let's look into the journal entries under the debtors system. When the goods are supplied to the branch, the journal entry will be branch account debit to goods sent to branch account. When the cash sent to branch for expenses, branch account debit to bank account. Please do remember that these journal entries are passed in the books of head office. The branch will not maintain any accounts. For the goods sold by the branch, there will not be any entry which will be recorded in the head office. But however, it can be entered in the branch accounts. For return of the goods by the branch, goods sent to branch account debit to branch account. For stock of the goods by the branch stock account debit to branch account. And whenever the credit sales are made by the branch here, branch debtors account debit to sales account. For collection from the debtors by the branch, bank account debit to branch debtors account. So here bank is a receiver of the benefit here, and branch debtors are the giver of the benefit. For petty cash balance with the branch, petty cash account debit to branch account here. For transfer of profit, branch account debit to general P&L account. If there is a loss, this entry is to be reversed, and in such case it will be general P&L account debit to branch account. Let us consider certain points while preparing the branch account. Here we should know the treatment of the credit sales made, or the shortage or surplus of the stock, or the bad debts, discount, etc. There will not be any entry passed by the head office in its books of accounts in the branch account in respect of the credit sales made by the branch, shortage or surplus of the stock, bad debts, discount. The bad debts that will be recorded in the branch debtors account, and similarly the discount is recorded in the branch debtors only, which is maintained by the branch account. Then in case of the depreciation of fixed asset, here the amount of the depreciation is not debited to the branch account. Simply it is a comparison of the opening balance of the fixed asset with the closing balance of the same. So every branch account debits its the opening balance of its assets to the branch account, and it credits the closing balances of the assets. And if there is any sale of fixed asset during the year, the amount realized on account of the sale of fixed assets is remitted to the head office. No cash is remaining with the branch, because for everything the branch depends upon the head office here. Then suppose, say for example, if any asset which is sold on the credit basis, the amount due is shown as debtors at the branch at the end of the accounting year. Then there is a pricing of the goods sent. Here the goods may be sent by the head office to its branch for the purpose of sale. It may be sent either at the cost price or at the invoice price. In case the goods are sent to branch at a price higher than the cost price, generally which is called as invoice price. In such case, adjustment entries are required to be made in the branch account. So what is this invoice price? Here invoice price is nothing but the price of the goods which is in excess of the cost price. Say for example, if the cost price of the goods is assumed to be rupees 100 and the head office will send such goods at rupees 110, that 10 rupees is nothing but the profit, or what we call it as a loading on goods. So this invoice price is the actual cost price of the goods is not revealed to the branch. The branch will be instructed by the head office to sell the goods at the price which is determined by the head office here. So such loading is added in the opening stock, closing stock, goods sent to branch, and goods returned by the branch. If the goods are sent at the cost price, there are no adjustments to be made. It will be very easy, because here the head office sells the goods at the price which it is sent by the head office. So whenever the goods are sent by the head office at the cost price, both head office and branch will come to know the true cost of the goods sent to the branch. But when the goods are sent at the invoice price, the branch will not come to know about the true cost, or I mean to say the actual cost of the goods, because the price which is determined by the head office is inclusive of loading on the cost. So such a loading, either it may be as a percentage of the sales price, or it may be as a percentage of the cost price. So in such case, whenever the goods are sent at the invoice price, this is in short what we call as the IP method. In such case, the necessary accounting adjustment entries are to be made. So the question comes here, why these adjustment entries are to be made here? Because the head office wants to know the true profit or loss here. So for that reason here, the adjustment entries are to be made here. Such adjustment entries are for removal of the loading from the opening stock, stock reserve account debit to branch account. For removal of loading from the goods and branch, goods and branch account debit to branch account. For removal of loading from the goods returned by the branch account debit to goods and branch account. For removal of loading from the closing stock, branch account debit to stock reserve here. So these entries are necessary for removal of the loading only and only when the goods are sent at the invoice price. If the goods are sent at the cost price, there is no question of passing these entries. And please do remember that the goods may be either sent at the cost price or at the invoice price. Whenever the goods are sent at the invoice price, the loading will be either as a percentage of the cost price of the goods, or it may be at the invoice price. To give an example here, suppose, say for example, if the goods are sent at 10% above the cost, in such case the cost to the branch will be 110 rupees per unit, that is 100 plus 10. Say for example, if the goods are sent at 10% of the selling price, in such case the actual cost of the goods will be rupees 90. So 90 plus rupees 10. So the necessary loading entries are to be passed only when the goods are sent at the invoice price. Thank you for watching this.